Alright, boys. Been a while since I chatted with you guys. It's feels like a long time. I was out of the market for 2 days. Went down to a friend's wedding. In that time, some pretty big moves happened. The biggest one that surprised me was the Aussie dollar rally, and I was there in some sort of pre-wedding groom's party situation, and I saw the Aussie above 77. I checked Twitter to see if Trump had been killed or something. You know, what the hell was going on? How did the Aussie get up here? I saw that iron ore had rallied sharply, you know, like 15 to 20% in 2 days, and that was obviously going to be a catalyst, and perhaps the selling of the Aussie dollar because of the loss of its yield status was something that wasn't going to happen, especially as commodities were rallying. And so if it wasn't going down, flipping back up, taking some stops above 76.30 is, you know, that's inevitable. Then that you can quickly get up to 77. But I thought that was extremely unsustainable given the general backdrop of the story, which is yields moving up, and RBA is probably not going to give the market what they're looking for, what they got from the Bank of Canada. They're not going to get from the RBA. That being said, the market has rolled over a little bit, and this is not really like it wasn't a play for that. It was just, you know, I thought we'd get a pullback. In general, we did. But, you know, that was a huge shock to me because it wasn't at the screen. I didn't know what was going on. You know, and I was talking about that yield compression play last week on Wednesday, saying that the Kiwi, CAD, and Aussie have room to fail here because Euro Aussie, Pound Aussie, and you know, that sort of buying will pressure the Aussie. It will lose its status as the carry, and the market will sell it. But it just didn't work out at all. He had legs there to keep on going up. It basically turned into the whole market against the US dollar and the yen. So we've seen that come through at the moment, and it's you know, it was surprising. You know, if you're not sitting at the computers and you see this sort of move, it's a noggin scratcher for me. The Kiwi didn't kick as high as the Aussie kicked in terms of the movement, but it's still above 73, still above its previous highs. And it has room a little bit to move higher. The Aussie 77 to 77.50 is ridiculous resistance. Yeah, this is what happened last year. Maybe 15 attempts above 77 and it failed, or 77 attempts and it failed on the daily here. And so selling above there is a bit of a no-brainer. But if we do break above 77.50, we've got ourselves a real serious chance to get to 80. And we have to be aware of that. We can't just be dogmatic about selling every Aussie rally above 77, especially if, say, a weak NFP number comes in and the market wants to pressure the US dollar in terms of if the Fed's going to raise again, and that story continues, and if oil continues to rally, maybe on the back of something from Qatar and what's happening with Saudi Arabia, we're going to see some potential fireworks there in Middle Eastern tensions in the next 48 hours. They've asked for a 2-day extension, Qatar. So Kuwait's asked for a 2-day extension for them, and then what, you know, the Arab states will do to punish Qatar if they don't agree to the 13-point negotiations, which they're not going to do, could be, you know, more sanctions and you know, stopping trading or starting a trade war in the sense of telling other countries you either trade with us or them. That would be ultra negative, and potentially lead to, you know, at some point military conflict, and just the whole tension in that point. If they start to use oil, because Saudi Arabia can use oil in its pressuring negotiation of other countries not to trade with Qatar, then you might see it dramatically increase in sort of tension, and oil prices probably will go through the roof in that sort of scenario, right? Buy, ask questions later. Until there's a resolution. If there's not going to be a quick resolution, it's something that can fester. You also saw US rigs, the shale rigs, start to pull off on that drop down to 43. So the market, you know, loved that story, and it really did buy it up, oil last week. So that's why Canadian dollar, unsurprisingly, with the whole market turning against the US dollar, did break back below 130. But we're at levels now which is very similar to the Aussie above 77. It's very likely that we can get some sort of retracement, especially if the euro wants to lead the way down. and the pound runs out of steam above 130, then some sort of retracement is very likely. Tomorrow is a public holiday in the US, and there could be some thin trading, and there is an NFP coming up, and so the setting is there for profit taking ahead of an NFP from these sort of levels. So you've got to be a little bit careful buying dips at these heights, because we are well into a mature rally in almost every pair. And so if you are going to continue to buy dips or sell rallies in dollar CAD's case, you want to buy a little bit smaller than usual. So as risk management, you got to use a bit of that, and avoid the temptation. And this is a harder one, of buying more as it falls more. So say if it does fall more. So say I'm like, oh, I want to buy some euro. I'm really keen on buying the euro for a break of 115 and potential upside to 120. I just don't want to miss that trade. And I'm looking back and I'm like, oh, where am I going to buy? Oh, we're going to buy soon. Might buy here at 111, 13.50, and then a bit more at 113. That's where you start to get, when you start to add to positions, that's where you start to get a little bit attached to the positions. If it breaks back below 113, it can quickly keep falling, right? Draghi comes out and says, you guys misunderstood, blah, blah, blah. That the ECB pushback will begin if that's what if that's what he wants, and he sort of does want that. He sensed when he saw that ECB leak last Wednesday. You might get more of the same in coming days. Probably a bit more aggressive if they want to have an effect, because the first leak didn't have any effect. But broadly, if the market's turning against the US dollar, it's not going to be sufficient to stop the euro, because the euro is the go-to at the moment if you're going to be selling the US dollar, because the story makes so much sense there. Pound still has a lot of political risk. I'm more favoured towards selling, say, the Aussie dollar. It would probably have a bit more risk reward on the downside if tensions flare up around the world. And also the top side there, I think the 77.50 break will be a bit hard. I wouldn't sell at 77 again now, because it's just tested that. But at 77.40, 77.30, 77.50, yeah, have a little sell with a 30-40 point stop. Nothing crazy. Should be okay. Risk reward. Especially if it's one of them false sort of final little hurrahs and it can't break it. A lot of profit taking above 77, between 77 and 77.50 for sure. I'm talking in the next couple of days. I'm not talking about trading the NFP number. A weak NFP number can definitely break everything to the top side or to the downside if it's stronger than the market is currently priced in. With the US dollar on such a back foot though, and we can straight up tell you right now, a strong NFP is going to have a much more, a bigger effect than a weak NFP. A weak NFP would be par for the course a little bit, and you might get a test of 115 or so, but it would have to be super weak to break it, I suspect, on the back of that, because the market's stretched a little short term, the short term buys. Dollar yen had a nice reversal today. It sort of led the reversal. That's with risk remaining on, so stocks are grinding higher. And with that in the backdrop, it is it means that the crosses are doing quite well. So the yen crosses are still the buy on dip sort of a go-to. So euro yen and pound yen are probably your best bets if you suspect this is going to continue. I'm looking for the pullback in euro yen. That's my favorite way of playing it. We want to get all the way up to 130, and so if we get pullbacks here that a little bit bigger than we've got so far, would be great. If I was trading Friday, that pullback there would have been fine. Pullback to 127.50 would have been nice enough. Yeah, I mean, that sort of action, as soon as you got that and then start to buy up, you might not get in at 127.50, but so 130 is the target there, and that's really achievable. It can easily go a lot higher than that too. If this is if it breaks 115, the euro USD and dollar yen continues to be contained. But yeah, we'll see how it play out. Now the euro Aussie, so that was a trade that we're looking to buy. It's pulled back actually, hasn't it, since Wednesday. Now looking to buy that on dips. This is the dip. This is the dip. If we're gonna buy it, we buy it here. I'm not really fully synced back in though. I've only been back in the market for 1 day now. And taking 2 days off when the market moves dramatically, I sort of don't want to pull the trigger too early on this. I suspect the RBA tomorrow will be more skewed to the negative than the positive. if the market's going in there with a mindset that there's going to be hints like the BOC about raising rates, I think they're going to be thoroughly disappointed. And if anything, the RBA might be left behind in the race that seems to be developing with all the big economies looking to raise rates, and it easily could become the laggard of the group. You know, the RBNZ's always trying to talk down their currency when they have the chance. RBA hasn't really been concerned about it, but the the Aussies at 77. If they're going to do something, they do it now, right? You stop it before it gets to 78 or 80, if that's what they're concerned about. If they're not concerned about it, that would be a surprise. And the Aussie might break test 77.50 or higher 77s on that effect alone. Given the green light by the central bank, the market's pretty relentless in testing that sort of thing. And the shorts are pretty worried probably now. The shorts that were selling on the failures, that sort of selling, they're probably a little bit worried that they're going to get squeezed here. And there'll be shitloads of stops above 77.50. So we'll have to wait and see how the price action develops before we look to it. The other sort of surprising scenario here is that gold is under so much pressure with the US dollar so weak. This is only really, it's hard to understand. Hard to understand. US dollar's weak, gold's weaker. Yeah, why is gold weaker? Risk is on. Dollar yen's well supported, and dollar yen going up does have that negative effect of correlation with gold going down. But yeah, it's mostly just risk on, and gold's a safe haven, so you don't buy it just with weak US dollar, and especially if it's not getting love on the crosses. So Euro gold or pound gold or Aussie gold, no one's buying it on the crosses. So perhaps it's left behind in this story. A global world where the central banks are raising rates is terrible for gold. A good economy world is terrible for gold. PMI has picked up again in China. The private PMI came out today, was back above expansion. So yeah, gold doesn't do well. So the weakness of the US dollar is one side of it, but the gold is actually weaker. So that's really the issue here. Can you buy it and expect range trading? Perhaps. Can you buy it on anticipation of Middle Eastern tensions? Yeah, you can. If that's the game you want to play, these levels are quite nice, and the US dollar is weak, but the price action is pretty terrible here, right? So you're not going to get me endorsing that trade. It's a pretty high risk trade. It's a pretty high risk trade, and the buyers who've been sort of holding on, they might get wiped out in a sharp little plunge here in the coming few days, and perhaps then we get down to some really nice levels, 1220, 1200 even, and then you can buy on the anticipation of Trump slash Qatar slash US dollar, also pushback again from the central banks from this new global rate raising theme that's developing. Yeah, so many issues in the world. If you're buying gold as a hedge against those, then it's not that bad a deal. But probably just wait for a little bit of buying action, or maybe even a catalyst. You can be patient, waiting on the sidelines. No reason just to jump in now at all. All right, let's have a look at some of the research, because we'll be a little bit more informed and on top of things than I am right now. Because I'm bamboozled by Aussie's move. If you told me that was going to happen, I'd be like, how? Only the iron ore really makes a lot of sense, yeah. That's a huge move in iron ore, and that's our main export. And that's on the back of everyone getting hyped up about China's recovery. It's continuing. Alright, so these last few Mondays we have been looking at the charts that matter from Goldman Sachs. It's quite a nice little report. It shows, the first thing it shows is trending or turning, they call it, but they're talking about pairs which are stronger and stronger. So they have a little quadrant here: strong than weak, weak than weaker, weak than stronger. So let's have a look at those and see if there's anything which catches our attention. So the first one here, the Kiwi. So the Kiwi, we said it really doesn't do, and it would be really hard for it to pull off another green weekly, and that's what it just went and did. Yeah, went and did another one. Looks like we're back above back below 73 right now. Actually, oh, interesting. See if it can break some of that previous lows. So we're wondering if we could pull off another green candle, and miraculously it did. Yeah, it's just relentless, isn't it? Still hasn't broken the previous high from the last rally back in end of January, is it? So you know, it still structures intact a little bit, but that was just another little final, perhaps a final little push higher. But I don't want to sell it. I don't want to sell it here. It's sort of like asking for trouble. Aussie Kiwi, I'm interested to see how that's developed last week. Aussie, I think, did rally faster than a Kiwi, but did we get back above 105? Where you going, Aussie Kiwi? You want one of our main trades? Oh, briefly above 105. That looks a lot better though, doesn't it? Looks like it's building a base a little. Alright, but nothing's too much changed, and if we don't expect the RBA to come to the party, I don't think we can buy this on any real clear mandate that the Aussie Kiwi is going higher. But it's nice price action, isn't it? It's, let's see if we can build a base above 105 before we look to buy again. And it usually doesn't move too quickly if we get that, so it might muck around for a couple of weeks, couple of months before we get another clear signal to buy. And it can still roll down, so let's not count our chickens till it's hatched. It is a nice levels. This is always where the battle is played though, around the 105 levels. This is where the the bulls and the bears really test each other. WTI was weak last week and then super strong this week, so it had like 3% drop last week and then a 4% jump this week. Same with the Aussie and CAD, weak and then strong, and the pound. DAX was weaker and weaker, only slightly though, nothing crazy. US yields were weaker and weaker. So US 10-year must be getting back closer to 10. I mean, it must be getting closer to that key level. So US yields are rising, right? But German and UK yields are rising faster. Let's have a look. Ooh, we are back above. You might be asking, how do I not know this stuff, right? I literally was away for 2 days, so I spent the day talking to clients a lot. Didn't really get time to check a couple of things I like to check to get that fuller, rounded experience. You're actually seeing, sort of what I would do if I wanted to check what was up, So I looked at a couple of different things, and I'm going through and looking at some of the key levels. So the US 10-year above 2.3 is a key level. And so we've that's half the reason you expect dollar yen to be up today. Straight off, you told me that I would have expected the dollar yen to be well supported. It has a really strong correlation with the US 10 years, more than the other yields. All right, let's have a look here at Brett Donnelly. Remember the 2014, 2015 when the Fed was talking about normalizing? Yes, I do. US dollar went berserk. They backed off despite prior promises to hike. They did that a lot. I'm curious how the pain points are for the ECB. And And where's the euro ECB pain point? I reckon 120 will be the pain point for the ECB, where they start to really get concerned. He's looking at euro dollar Swiss as his trade. So dollar Swiss is a little bit like a short euro, but if euro Swiss is rallying, and let's check the euro Swiss to see how it's affecting, because that's the if the euro goes up 100 points, dollar Swiss goes down 80 or 70 or 100. And now whether it goes up or down is basically contingent upon how euro Swiss is or how much it goes. Dollar Swiss is contingent upon euro Swiss. And so if euro Swiss had broken 110, then I'd be more keen to be buying dollar Swiss as a way of sort of speculating on a US dollar bounce back or just a nice risk reward. And that's also helped along the fact that gold is weak, which usually is sort of the same as the Swiss being weak. But the Swiss is strong just because of the euro rally. And euro Swiss is not rallying enough to sort of counter that. So I don't know, I can't endorse buying dollar Swiss at this level, even though it's a nice level, because I don't really suspect that the euro is going to stop this rally so quickly. And it's asking for trouble, right? Because it's going to get harder and harder to cut, because it'll be the same sort of game a little bit later at 95. You know, where do you cut? It's not the trade for me as a way. If there is some way that euro comes under pressure though, or that the US dollar bounces back, then dollar Swiss is a compelling level here, and it does make a lot more sense with the risk on sort of market at the moment to be long dollar Swiss. It's sort of like a little bit of a dollar yen hint to it, right? When stocks and yields are strong, dollar Swiss generally does okay. So does pound Swiss, so does euro Swiss. But just in this particular dynamic, it's hard for it to break away from the euro buying, so it's basically a counter euro trade. And if the euro is getting stronger, so is the Swiss. So yeah, I'm not going to follow his little rant here. He says it at the end here, long euro is basically short euro, which I'm fine with given the DAX has been underperforming. I don't know if the DAX is really the prime mover in currency markets anymore. Back in the day, the DAX was important. A rally in the DAX and the euro fell. But I don't think that would be the case at the moment. And the huge trend line they're talking about is the downward trend line from back last couple of years. Let's have a look at it on a weekly. I might have drawn a bit off. Alright. So yeah, we'll leave that to the side. Let's have a look at the UBS spot desk, see how they're viewing this. Relative holiday mode, or mood, in this pair is the US market bridging today with, okay. Yeah, so I mean, look, maybe things will settle down. You did get a bit of a US dollar push higher at the start of the European session though. So there is a bit more movement than nothing. He's looking to fade rallies in the dollar yen, okay. Makes sense. The question is whether the RBA will join the hawkish central herd. This is the main reason I would sell the Aussie against something, or buy the Euro Aussie. In fact, I'm going to buy the Euro Aussie. I'm going to buy the Euro Aussie right now. I suspect the RBA will not join the herd tomorrow, and that the Euro is going to be stronger in general than the Aussie going forward. And the Aussie's got the big sort of resistance at 77, 77.50. So I don't mind that trade. We're looking for a continuation of the impulsive rally that we got after the market went crazy with Draghi's, or the euro break, but Draghi being a bit more neutral. Alright, so this can work a few ways. You can look for euros outperformance, or you can look for Aussie weakness. Either of those can happen. At some point, if we do roll down, I'll look at that stop a little bit later and see where I want that stop. But I'm not too worried about that trade. This trade should start to work. If it's going to work, should start to work tomorrow, with the RBA being neutral and being the Aussie being left behind. We probably want to see a break of 150 actually. Get it above 150 where we got up the top there. A little bit lower. Alright. Let me post that up for you guys in the room. So you're still trading with a trend. It's just a little bit dangerous because we're trading into an RBA central bank meeting. I do like to think I've got a good grasp on the RBA though, but I could be wrong. Could be wrong. Been wrong before. Let me post that up. Let's see if taking a couple of days off the market hurt me. I was on a bit of a run before. Alright guys, so let's finish this one and then we might call it a day today. It's going to be a big week, so much data, so many PMIs, NFP later in the week as well. Tomorrow might be a bit quiet because of the holiday, but Asian session will still be lively, potentially here with the Aussie. Euro Kiwi is another way of playing this as well, but I wouldn't do CAD. I wouldn't do CAD. I wouldn't be selling CAD. Selling Aussie CAD makes sense too. It's a nice trend. It's got some big sort of gap below here if we can break down further. Just gravity is weighing on it right now. So selling rallies in this makes a lot of sense here. Ideally you'd like to sell it at parity again, but you might not get the chance up there. Alright guys, if you do want me to look on any particular pairs, or you want me to look at crosses in particular, I can give you my thoughts on the backdrop of where they're at and how they're traveling. In terms of the pound rally, I didn't really touch on this too much. I mean, it was sparked by Carney's comments sympathizing with the other BOE members last week, but 130 is a big level. Yeah, 130 is sort of the target almost of the short-term buyers of the pound. So let's get a little careful if you're buying above 130. You want to see it be a bit more comfortable above the level. At the moment, it's still a little bit of a sell zone, isn't it? So we'll see if it can remain higher. It has to go sideways a little bit to sort of work out to regain sort of strength to have that retest higher. In terms of data and speakers, there's Hal Dean speaking again. He's the hawk, and then there's so that could help. Then there's a lot of PMI data, but also Carney speaking later in the week at the G20, on the side of the G20, I believe. So that could be another catalyst there. Either way, we'll see where the market's at when we. But looking to buy dips isn't the craziest idea, that's for sure. Along with the euro, whenever the euro finds support, look to buy the pound with it. Alright guys, good luck with your trades. I'll be back tomorrow, and we'll go over Kichi, fairly similar to the Aussie actually. So what we touched on the Kiwi is that it's sort of breaking records or its own sort of limits in terms of its weekly chart. So we were surprised sort of that could match just one more. So we're selling, or looking to sell, or selling actually last week before last, and it managed another quick rally to fresh high. It's still below the previous high, but this is a huge sort of move for the Kiwi generally before we have a pullback. Even if the pullback's only a smallish one, then it's it'd still be making more sense if it did have a pullback towards that 71 level. And then if you're a buyer longer term and think RBNZ is going to be forced to raise rates next year early, then looking to buy on dips, it does make sense, especially if the US dollar continues to be weak. But you're going to run into a little bit of exhaustion if it gets too much higher. And this could be a big pair, a big cross for the Kiwi, is the Aussie Kiwi. So if the Aussie Kiwi can regain the 105 level, then you can see a couple of days of selling in the Kiwi. And you've probably seen that in the past if you traded the Kiwi enough. And you've noticed that if the Aussie Kiwi is rallying, and the Aussie Kiwi can easily short squeeze here, then the Kiwi will get sold off in sympathy, or it's not sympathy, actually straight up Kiwi selling. There's too much Kiwis being sold in the market. And in that sort of situation, then yeah, the Kiwi does badly. So it's actually, there's not that much volume in the Kiwi dollar. So when the Aussie Kiwi is being bought, it does affect the major. It's sort of like when the Euro pound's doing some big moves and the pound gets affected. That's sort of the relationship Aussie Kiwi has with the Kiwi dollar. Not so much the Aussie, but the Kiwi dollar. Alright guys, good luck with your trades. I'll be back tomorrow same time. We'll have a bit more of an update then, especially on the Aussie dollar. Hopefully we are doing well then.